Welcome, everybody, to What Stock to Trade Today. And this is me, Gordon Scott, and I'm going to tell you Apple is the stock to trade today. That's right. I mean, I want to walk through why I think that's the actual answer. I also have another, it's not quite a penny stock, it's a $10 stock, low cost option that is on the rise very strongly, and I think could continue to rise more, which also will probably be good for this week. But 60 minutes from now, when the U.S. market opens, the stock to buy will probably be Apple. So let's walk through why that is and what other ideas you might consider if you don't like the idea of buying the most heavily traded high market cap stock, $2.5 trillion market cap company, Apple, which lost its court case ruling here last week, and we'll look at what the stock did because of that losing of the court ruling. So let me see if I can just get my chart ready and share my screen for you there. The thing to understand about Apple is it's such an important bellwether stock that you have to pay attention to it, whether you want to trade it or not. It's the rest of the market just kind of moves on what Apple does. I want to give you an example today that goes into the details of why that is. But for now, let's see if I can just share my screen. And you should be able to see the chart of Apple up right now. Take the news panel away for the moment and adjust my video. Okay, there we are. All right, so Apple has had this nice run since April, but huge drop, 3% drop as of Friday. Well, what happened was that the U.S. court ruled against Apple in the dispute between several other companies and Apple over its practice for charging commissions on apps that are in the App Store. So the idea is, if I have, it really came down to this company that produces and runs Fortnite and the big multi-person gaming platform. So if you download the Fortnite app on Apple and then you make purchases in Fortnite, then Apple can charge anywhere from 15 to 30% of that charge. That's the commission that Apple charges for being on the platform and being able to sell stuff. Well, in the case of Fortnite, then a ton of their money was going, their money, right? A ton of the money that customers were paying them was going to Apple. So they wanted to not, they wanted to bypass Apple's commission. So they developed this way where you could download for free on the App Store, and then you could play, and then there were ways that you could play within the game and purchase things that didn't require, or that didn't go through the App Store, and so they were bypassing the commissions. Apple sued them, and they came back and countersued and said, shouldn't have to do this. You're acting like a monopoly, and the courts weirdly ruled kind of in favor of, you're both right, the situation. What they said was Apple has to go about building in a way for them to allow their own kind of app purchases or purchases within the app, in-store purchases that are not connected to the Apple App Store. So people felt like, wow, that's going to make, analysts felt, wow, that's going to make a big difference. Apple's not going to be worth as much. And so, down it comes, right? But in fact, the other side of the coin, that they are still allowed to charge it. They can keep charging it. They're going to make this other way. And then companies have to kind of take advantage of it themselves. So there are some companies that probably won't take advantage I mean, they'll just keep paying the commissions to Apple because it's worth it, and to make their own separate um, uh, thing, money collection mechanism would be cost prohibitive. Now, for the bigger companies, of course, that's not going to be true. They would people that are making a lot of money through their apps on the App Store, they can afford to go ahead and develop their own, in-store purchase mechanism separate from Apple. But that's not going to be everybody, and especially for new people starting out with an app that it's not proven, but then somehow it catches steam and gets going. If that whole period, they're not going to do anything other than just let Apple do whatever they want to do with the commissions, because that gives them access to everybody that's coming to the App Store. So I personally feel like that was a good ruling, because this will actually show whether or not Apple is behaving monopolistically or not. I mean, Apple could always make the case, well, they can go to Google, they can go to Microsoft. Those guys have stores. They don't have to come to the App Store. Yeah, it's true, except the App Store is a whole lot bigger and a whole lot better, and everybody's, if you've got an iPhone, it's kind of your only game, and so uh, it's kind of a gray area. It could really go either way. So I like the idea that the judge says, yeah, you have to make an alternative, but you can still keep charging what you're charging, because that'll essentially make the charge a market activity. In other words, if it really is worth it to a customer to let Apple go ahead and charge it rather than build their own, well, then Apple should be rewarded for that, and because they're providing a service that this smaller company couldn't afford to develop themselves. And if in fact it turns out everybody starts building their own because it just isn't that expensive to do that, then Apple's charging too much. And so this creates a market-driven mechanism for both Apple and the app developers to sort of hammer out. And I think what will come out of this over time is that Apple will end up having to charge slightly lower commissions after a while in order to remain competitive. And that is totally appropriate. But will that really hurt Apple's revenues? That's a good question. And on Friday, investors said, yeah, to the tune of 3%. That's our guess. That was the market's collective guess. And so it dropped the market price down into that closing number of, what was it, about 148.90, 149-ish. Yeah. Well, after hours, our pre-market so far this morning, Apple is trading higher. Let's see if I can bring up the quote. We might need to do that in order for a quote to come through. There it is. Yeah. So Apple is trading 150.56 by 72, meaning they're up $1. Now, that's not all of it. That's only up to here. It's only up a little bit. So you could say, well, that's nothing. But what it tells you is that this was an overreaction. Analysts came in and said 3% lower. Well, the market right now is saying Apple on sale, 3% off. So that's the back and forth. The fact that it isn't going lower or staying at the same price and lower means that, as is typical with market behavior, this was likely an overreaction. It's not that bad. And if you look at where that number comes in, 150, see, that's above the run-up price here, meaning what was old resistance might begin to act like new support. And I feel like, hey, look, if that's support, this is a fantastic dip to be buying on Apple. So that's kind of my rationale of why I believe Apple's probably the best choice right now, even though, market cap stock there is. You sure you want to buy more? Well, yeah, you should, because this decision, the way it was implemented, is going to keep people from feeling panicked or like avoiding Apple. They're not going to say, well, let's develop for this or for that platform because Apple is too cost prohibitive. Well, with this, that would never be true. So they're not going to lose developers out of the App Store. The iPhone platform is not going to be diminished for want of cool apps and high functioning apps being put onto the system. And more importantly, I think apps for things like iPad Pro, which I mean, the iPad Pro device is essentially the replacement for a laptop. It's uh, what you get if you have that keyboard attached to it is something that's functionally better than a laptop because the battery life is longer. The screen resolution is more beautiful. The weight is lighter, and you still with the iPad Pro you still get a very large screen. And I mean, watching movies on a computer screen, a PC computer screen, compared to watching them on an iPad Pro is noticeable, is noticeably better on the iPad Pro. So I mean, just all of it in general. I feel like your the iPad Pro is really and it's touchscreen, right? So the importance of that is high-end apps, stuff that you would pay anywhere from $20 to $200 for, could come and be part of that platform. They wouldn't be billion item sellers, but they would be very important apps that could be specific to various market verticals or whatever, right? So I just feel like Apple's not going to lose money from their app store situation. Maybe they're going to lose a little money to Fortnite. That's actually a good thing. Fortnite's value was established more by Fortnite than it was by Apple, and I don't feel like I think it's good for the court to say Apple, you don't have a right to be getting money from Fortnite when they themselves have built their value, and just because of the quirk of the platform you built, that you have to force them through that pipeline. If they're capable of building their own pipeline, they should be allowed to create that benefit. So I think it was a good ruling, and I think it's good for Apple long term. See, because if Apple um, is going to lose a little money to Fortnite, but it was money that they were just strong arming anyway, um, then that's really long term. That's not a um, that's not Apple's business plan to chokehold other companies all the time. Uh, I kind of feel like Microsoft years and years ago went down that path, and that's the reason Apple thumps them, because they in doing that they kind of stifled what was going on the Windows platform in a certain way, and so people want what's on the alternative on iOS and smartphones and other things. People really like Surfaces, but pre-pandemic, it was a joke how many people would attend, how many people would go to the Microsoft store compared to how many people would go to the Apple store. It's like, I mean, I don't mean the online thing, I mean the physical presences, right? So I don't feel like just the mechanism itself is what's there. It's the value of what Apple's able to innovate and build and deliver to people. And that was priced clear up here at 156 just last week. So is it really the case that all of this was just hot air? If that's true, then the U.S. market in general has some real problems. I don't feel like that's the case. The U.S. market still has a lot to offer to people because inflation is coming, and the best way to stay ahead of inflation is stocks, and the best stocks to stay ahead of inflation with is U.S. stocks, the least likely to fail and lose the attraction of investors. So all that being said, I feel like this is a dip. This is a dip for Apple, and it's good to buy. Now, if you were wrong, then what you would see is Apple dropping back below 148. If I'm wrong, then Apple's gonna get down to 148 today. If you were to buy the stock and then set a stop loss at 148 today, be willing to just risk that. Well, that's a small risk compared to where it could go. It's a $2 stop, and where you're headed eventually, within, I would say, probably 2 weeks, we'll be back to a new high above 157. So, it's risk two to make seven kind of situation. Now, theoretically, that should be less than 30% probability of winning. That's if you held on all the way to um, 157, or insisted on holding all the way on to 157. However, I feel like that's a risk worth taking, because if you take this same kind of risk uh, 10 times, I feel like you're going to win this at least 5, maybe 6 times, because the situation is just that strong with Apple. And I mean, I could be wrong about that, but that's why you got to do your own due diligence. It's not a personal recommendation for your trades, et cetera, right? I'm not a licensed registered investment advisor. I just like the stock. And so what we got is a situation where we could have a trade on Apple. I'm going to go ahead and line up what that would look like. So if I were to set a take profit and a stop loss, as I mentioned before, I'm going to try and make a really tight stop on Apple. Well, tight for Apple. Let's see. We'll actually bring it down a little lower than that. We'll go risking 270. Yeah, to 148 even. And I'm a little superstitious, so I'm going to go 271, 147.99. Don't want that 140 tick, or 148 even tick. And meanwhile, the take profit, I'm going to go ahead and put that at 200, 152. Now, I would see. Here's the thing: if you want like a 65 or 70% chance of making profit, then this is the kind of thing you would do. You would buy this at 150 and you'd probably sell it at about 152. So 270, 140, we'll go 150. Yeah, yeah. So one even 140 would get you there. So $1.40 higher. If you just want to take that quick profit, then buy Apple and give it a $2 stop loss and take a $1 profit. You'll have like a 70% chance of getting that. Of course, it's all you get, right? I feel like what I want to do is set up a trade that is either going to, just be taken out, or it's going to run up and give me a chance to let it run higher. So I'm actually going to set this thing up at like 300, 153, 70. See, I doubt Apple's going to get all the way back to here today. If it did, I'd probably want to take it though, just because that's a really strong move. So we're going to go $3 higher, 271 lower, and if I have a $200,000 account or so, and I want to do 1% risk, the amount of size is going to be 840 shares. So I have a fairly large account. Now, if I had only a $20,000 account, then I'd be only buying about 80 shares. If I have a $2,000 account, I'm only going to buy 8 shares. See how it all works? Okay. All right, but we're going to put that on in the paper trading situation right here, and we'll say, give me 150, 70. Yeah, 150, 70 limit order, and we'll see whether or not I get filled for that. So for the other trades that I still have running, these ones, I think I just got to close them. They've been too long. Or these low price penny stocks that just haven't gone anywhere for ages. Microsoft trade came back a little bit on Friday, but it's still doing well. Unless did I miss my stop loss? Yeah, let's see. I'm just looking at that. I wonder if that thinking that stopped out some, but not all. Yeah, because the quantity is only 350. So that let me do count history here. It should show. Um, AMD executed is Pfizer. No, don't have one. Don't have the Microsoft position partially closing like I was expecting it did. So that's okay. Still running good. And of course, the Spotify trade is also still doing well. Got the stop loss on Spotify at 237. Let's have a quick look at that. Well, I'm sorry. Before I do that, for some reason, the Microsoft trade. See, now to me, I think, well, that's true. It didn't still break a high. It just broke this high. Right. So then my stop loss should be back here. And this is why you do this. See how this has come back. If I had raised my stop to here, that'd be fine because I would have captured that much profit. However, see, we don't make a new one until whatever high runs up gets retraced and then broken again. So once it breaks, then we're going to raise the stop to whatever the low is between those 2 points. And see, it would have been here. Had this gone up and broken a new high, we would have been up there. By now, we would have been stopped out. But we haven't done that. So the stop is still sitting back here at 288. That's where it should be anyway. And for some reason, it's not. I probably put it on as a day order the last time I adjusted it. And so it canceled it out. Let's do stop loss. And let's go to 88. Okay, we'll keep that in there. All right, and so we have Spotify now. So Spotify, we got at 237. Yeah, right underneath the latest gap. So we're just waiting on that. We made this trade back here. And see, not all of them run, right? Every time I give you an idea, these trades, they don't always work. I gave you Pfizer, and that has simply not worked. Bummer, we're out of that. By comparison, Moderna, I mean, here's something interesting. See, Pfizer and Moderna, wouldn't you expect of them? I mean, they had been acting so similar, but Pfizer's gone down and Moderna has gone up. Isn't that interesting? What's up with Moderna? Why is it doing that? Well, we'll look at that in the future, next week or week after, depending on when that's most relevant. But for now, just know that Moderna has technology, or I should say, patent benefits that Pfizer doesn't have, that market's valuing. So that's kind of what's going on there. But we'll get into a closer look at it. I think Moderna is a good buy right now. Not really. I mean, if you like Moderna, if you like the idea of trying to win the investment on the Delta variant or other COVID situations, then great. But I don't really. I'm not a fan. Not at this time. So Shopify. Back to Shopify. Or not. I was at Spotify, back to Spotify. But while we're here, let me call out Shopify. Similar sounding name, totally different situation. Notice that this is a $1,500 stock, and it had a big run, but it's just been holding level for a while. I'm gonna draw your attention back to Shopify in the future at some point, but today is not that day to be Lord of the Rings. Spotify. I think this is really an interesting point for Spotify, because somewhere right in here we could easily see a new re-entry point. Yeah, it's 209 by 257. It's the trading is too light to know where exactly this thing's going to open. but at 257, that's way up here, right? And then 235, that's way down there. So hopefully, I mean, certainly this thing will narrow in before the market opens, but we got to stop back here because we want that whole gap to be our support. And if the gap holds support, then this thing is likely to turn around and head for a new high up there in the 280 range. So that's, I think, a really interesting possibility. All right. There's another stock, though. If you don't like any of these are all kind of large cap ideas, right? And let's look at QQQ, the NASDAQ. See, the NASDAQ pre-market is 378 by 74 or 74 by 75. That's a strong move up, right? 376.85 up to 378. 70. So that's like a $2 move rebounding. Why? Because Friday was an overreaction, not just on Apple, but on a lot of things. It was an overreaction. And that's what the market's coming back and saying is that, oh, we shouldn't have sold. Look, the market did all of this, got up here, people got nervous and sold it down, and now they're jumping right back in to buy things up into this price level right in here. I mean, that's buy the dip. That's buy the dip behavior. That's what that is. It's not, oh, we're going to sell down. This is the trend, and we're sticking with it. Thank you. So, I mean, it's really telling us that the markets are still interested. So with that, let's do what we do so often here on this morning pre-market look and go check out the futures. Let's see if I can get the NASDAQ futures up and compare them with and let's go to 5 minutes. Sorry. There we go. And compare them with the Aussie yen. No, not futures. We'll go also the 5-minute chart so we can see what this looks like since the weekend. So we got 12 and 13, 12, yeah, right there. So this is the Aussie yen over the weekend. Found a little support, made a dip, but since then working its way up. The corresponding stuff on the NASDAQ futures looks very similar, right? I mean, that's what we've always said is the Aussie yen pair and the NASDAQ are generally quite correlated, and we see that same behavior. NASDAQ coming up, Aussie yen coming up. This is the whole world saying, I guess the Delta variant really isn't that bad, because on Friday they thought it was pretty bad. Now they're kind of like, maybe it's not so bad. Or, I mean, if they're not saying that, then whatever they are saying is still very bullish for stocks. But that's kind of the point, is that you've got people coming into this today. And if this is the case, see, if Apple is if Apple's so correlated to the NASDAQ and the market at large, and the market at large is coming up, well, that's going to lift Apple. And we'll see early on if people decide, oh, right, that's still a good idea to buy Apple, then they would jump in. You'll notice that the NASDAQ, the QQQ chart, do this. And let's go 30 minutes. And 30 minutes. Okay, so now this is the Friday chart. Actually, I can't do 30 minutes. I gotta go back to the 5-minute chart. I want to show you this because I thought it was really interesting last Friday when I was looking at it. The comparison between what happened with Apple and how it kind of had an effect on the rest of the markets when the news broke. Okay, so here comes just look at this chart. It's about the same. Yeah, right there. See, this is the same time frame. They both opened higher. People were willing to buy more of everything at the open on Friday. See, to me, this kind of debunks the whole idea that the Delta variant has scared everybody. Because everybody knew what the Delta variant news was before the market opened on Friday. Then why were there all these purchases? Well, it could have been because people are putting 401k money in, and you put that, you do something there on the day before, which translates into, and it's Friday, it's end of the week, it could be paycheck money coming in, whatever, right? And so this is basically dumb money coming in, or I should say automatic money. It's not people saying right then, here, let me do something. It's like they made this decision after the market closed on Thursday, and then they didn't get in there and pull it out. They didn't have the ability to. So all these buy orders came in, and then they just got sold straight down. That's what it kind of looks like, right? But take a closer look, and I think you'll see that what happened was this is all just normal market action. A lot of demand, and then intraday market making and sellers bringing it right back to there. But now we hit equilibrium all through this. Big sell-off came later in the day. What caused the sell-off? I believe it was this. So here we have Apple coming along, and then Apple tanks right there. Why? Well, because this was when the news was released about the court decision. So Apple goes from 154 clear down to 148.80, just instantly. Well, instantly within an hour, drops hard. And look at what's happening on the NASDAQ at that same time. At 11:10, right here, this is what the NASDAQ does, just right through here. It goes just a little bit below its old resistance level, and Apple's tanking. This is not panic behavior. See, and this also shows you that Apple and the NASDAQ are not mathematically tightly correlated. And what I mean there, the reason for that is, see, Apple is a component in something like 400 different, 300, Google's 400. Apple's a component in 300 ETFs, one of the top 15 positions in those ETFs. And so whatever Apple does is just going to ripple through the markets, and because those ETFs are going to start selling down, and then their components that are all the other components in those ETFs are going to become less valued, et cetera, et cetera. And so you would expect that unless all of those things were just locked in to their valuations and algorithms, in which case then they would just all instantly change. You would expect that what happens is if one highly influential makes a move, Apple, then the others are going to slowly adjust and finally catch up. And that's exactly what we see here. Here comes Apple. Apple rises a little bit, right to about the level where it is opening today, interestingly enough, right? So these are the optimistic, these are the buyers. They brought it up to here, but then the buyers can't make it go any farther, and they bring it back down to close on the low, but no lower than where it already was, right? So in theory, if Apple is hitting the NASDAQ because it's like 10% or 12% of the NASDAQ or whatever it is, if it's hitting it in a strictly mathematical function, then we should have seen the NASDAQ take out its lows. I mean, it kind of did a little, but we should have seen it go down a lot right through there, right? Well, it doesn't. It just goes down a little, and then it comes back up just like Apple does. But then when it comes down, Apple comes down and hits that same low. This comes down and hits a much lower low. Why? Because it's taking a while for all those shares to sort of shuffle around and reevaluate. And the ETFs at the end of the day, their algorithms are catching up and saying, oh, Apple's low. We have to account for that. And down it comes. Well, this was an overreaction. And this is just a mathematical follow-on, which is an echo of an overreaction. And all of that is evidence as being true. What I'm telling you is actual. It's an overreaction because of the way the markets are acting this morning. Whoops, wrong one. quote. If I'm looking at the quote, we're up at 378, 80. So we're up in here. That's where the NASDAQ is going to open up, is the QQQ is going to open up, is clear up in here, right? Again, that's back up above the low. And so now we're kind of coming back into sanity. Apple, on the other hand, it's going to open up. Let's see what its quote is, 150 by 50 or 150.50. Yeah, it's going to open up right in there, up at the same place where the buyers got to. That's where it's going to start. Okay, so I feel like this is a really good opportunity for aggressive buyers to jump in. And hey, if we take out these lows, we sell down again. Okay, fine, you win. Get out of the way, because that could be a significant, new downward trend in the markets. Now, if you felt like, oh, Gordon, you do not know what you're talking about, we're not going to buy back up, this is the top, this is the big sell-off, Michael Burry's calling for a short, we need to be short. Okay, if that's the way you feel, then all you have to do is wait until you see Apple take out these lows right there at 148.72. If in fact those get taken out, I would agree with you, that's the sign of a potential market top and a potential drop from there. Now I think you might want to wait and see how, if it goes 50 cents or $1 lower, or if it closes lower for the day, because it could come down a touch and come back up still. I mean, there's all that, right? But generally speaking, if it takes out the low from wherever it is up here, if it comes down and takes out the low, that's a very bearish signal to me. That's saying that the sellers are strong enough that the buyers are going to have a real hard time overcoming them. Okay, so so I think that it's really worth watching the close activity between Apple and QQQ today to see overall what is the larger market going to do. All right, so over the next little while. All right, I'm going to go back to the daily look, because I want to show you a few others. So if you don't like this idea, well, before we go on, this is a very big bad move, but it was driven by what I think was a misunderstanding and overreaction. So I'm not taking this especially because if you look at QQQ, it's not the same. QQQ being the same, it should have been down to here, right? Had it been there, that would clearly be, hey, bear market on the way. Now the spiders, they had a big, S&P 500 had a bigger drop, but again, it's still not huge, right? And the Russell 2000, yeah, it's a drop, but again, it's not huge. And so I just feel like we aren't in serious panic mode. I feel like the markets are, still being resilient, and we could see one other one, MSFT, Microsoft. See, here's the other thing too. If Apple were going to lead all the markets lower, then we would see Microsoft doing it with them. Yeah, Microsoft came down, but not like Apple, right? So there's people out there that still want to buy. Amazon, hanging in there. Google, that's kind of an ugly candle on Google. Interesting. Facebook. I mean, that looks straight up bullish. If that's all you could do was sell down into an ascending triangle position, that looks bullish to me. Netflix. Yeah, Netflix has this big run and it's holding on. How about NVIDIA and the chip shortage? Oh, big chip shortage, right? Yeah, well, NVIDIA actually rose on Friday, right? So I don't see people acting like they want to find excuses to sell. Bear market, change of trend from up to down. That's what happens. People go looking for excuses to sell instead of looking for excuses to buy. So I feel like it's very important to stay focused on the bullish direction right now, and so that's why I really like Apple. But there's some other ideas that I want to tell you about. there's this UVXY. If you feel like the bear market's coming, UVXY is one way to play it. SQQQ is another, but I'll look at those in a second. Meanwhile, I wanted to draw your attention to the idea of something else that's active but looking bullish. Maybe this one. And then over here on this side, apologize, I'm looking for a stock that I saw earlier today, earlier this morning, that really captured my attention. I thought, oh, this is good. I gotta see here. Oh, might be this one. Yeah, there we go. All right, so this is looks like a Latin American financial outfit. I really don't know a lot of the specifics behind this. Healthcare stocks. Grupo Financiero Galicia SA. Is that healthcare? Wow, interesting. Britain's top measure 12 to get COVID. All right. So this might be a vaccine COVID thing, healthcare. Here's what I like about this chart pattern that I want to draw your attention to. See that volume? As it comes down, the volume, as it goes up, the volume is high. As it comes down, the volume gets low. This last run up, we've had high volume, but on average, even with the ups and downs, that volume is still there. So we went for an average volume in here of around this level to where we are now, up around this level in terms of just visually looking at it. In other words, we got more investors and they're still around. And with all that new activity, even these big red candles selling, they're not selling down to new lows. So I think that although it might come down and kind of challenge this a little bit, I feel like there's a good chance for it to head back higher again once it sort of consolidates and settles in. Now, if this is healthcare, this might be Delta variant. So if in fact Delta variant or COVID concerns are going to continue, then this thing could really jump at that point. And if it doesn't, well, then this wouldn't be that great of an idea, right? Pfizer's not looking so good, so maybe, but whatever. I mean, Pfizer started dropping from here. Whatever is not dropping Pfizer and is moving Moderna higher. If you like Moderna, you probably got to be interested in this thing. If you like Moderna to turn around and continue and go up. I just think the volume pattern, technically speaking, I really don't know enough about the company and its own situations, but the volume pattern is really interesting to me. I feel like this thing stops, you find some support that it could head to 14 as its next move, if in fact all that sort of whatever's driving it continues, right? So I wanted to draw your attention to that because I think that's an interesting idea. I don't feel like it's the top idea. I feel like Apple's still a better idea. Let's go back and look at this one though, UVXY and SQQQ, and talk about these. If you do feel like the market's going to go down, what are you going to do about that? Well, here's the answer. UVXY is basically the VIX, and so VIX is volatility, and if the way the VIX works is it drifts lower and then all of a sudden it just spikes super fast higher if there's bad news. So if in fact the market is going to go down, if Apple's going to take out its lows today, then the VIX is going to probably, if Apple's going to take out its lows and then drive the rest of the market lower, then there's a really good chance that you'll see the VIX come up and spike up to this level. So if it does that, then UVXY is going to similarly spike and move to its more recent high. Now see the difference between UVXY. UVXY is this terrible thing for long-term buy and hold because of the way its funding and mathematics of its valuation work. It just loses value. It's kind of like, here's the VIX, and then let's tilt it, and that's UVXY. So never hold this thing. It's always a trade. If you buy this at the right timing, though, and you catch a good trade, it's fantastic. I mean, here's this buying at 28. You could sell at 38 if you just magically know how to pick the high, right? I never play this because I don't try to magically pick the high on stuff. I mean, I've done that. I've done that. It's a lot of fun, and I've had some fun success at it. But most of the time, I don't do it. Most of the time, I don't know. Hey, this is it. I've got to sell right here. So, so I don't typically play the game that way. However, some guys who are better at the game and smarter at it than me, they do. And one particular guy by the name of Mark Sebastian that I follow, he is picking UVXY. And it's interesting, buying UVXY on Friday, would have been late in the day, somewhere there. You can't buy it now till the market opens. Let's see, where's it going to open? 22.36. So it's going to open clear back down here because the market's going up. This is upside down, right? But that's actually really good. If you thought the market was going to go down and you could pick this thing up here, if that market goes down, this is going to make a new high. So buying this today at 22, and if the market goes and hits its low, that thing's going to be at 24.5 today. So that's a nice quick hit. I mean, I like the idea. I wouldn't want to do it unless I saw the markets, start deteriorating. I felt like the deterioration was going to continue. But for like a 1 or 2, 3 day kind of quick hit trade, yeah, it's interesting. But it's entirely based on the idea that the market's gonna sell off, kind of, yeah, dead cat bounds were up, but we're gonna come down. We're gonna make this new downward trend. If that were the case, then yeah, you definitely wouldn't want to be buying Apple today. Instead, you'd want to be buying something like this, SQQQ. We've talked about SQQQ before, and similar to UVX, right? This is a terrible buy and hold, but it's a really great one-day trade because it is 3 times whatever the NASDAQ is. Now, this thing is actually going to open 738, so right in here, right? I mean, that's if the market drops 1%, this thing increases 3%. So if we were to see the NASDAQ drop 1% today, this thing would go up by 21 cents. 737 plus 21 would be 758, right? Yeah. So if the market gave up and made a new low today, then this thing's going to start here and it's going to go here. And so it's going to be a 3% gain. I mean, you're probably not going to see this thing run way up here. Definitely not going to see it today. But you might not ever see it come back and hit this point because, well, see, that's what this thing does. It just loses. If we had this huge bear market move, right, this to that. See, I mean, if the market were to lose 10%, that's market coming down, and the QQQ coming down by like 40 points, $40 off of its 338, price. That would be this huge pullback. That's actually more like 11 or 12%. This thing would increase by 20 or 30%. But even so, 20 or 30% on $7 is only being like 9 or 10. So it's only coming back to here. It's not coming way back to there, right? Mathematically, even if the markets went to 0, the most this thing could do would be to make it to 21, to right there. So even if the whole world were to collapse, it's only going to right there. And it does that, though, you're never getting your money back. All right. All the banks are dead. What's more likely is that market drops by 10 to 20%. This thing, therefore, goes up 30 to 60%. And so you're talking about up into there. And that's cataclysmic move. But over 2 months, it could get to that high if in fact things got that bad. I don't tend to try and pick that with SQQQ. I try to pick, even if this is going on, it's like this happens, comes back, but I think it's going to go more. Great. I want to capture that right there. This is a short-term trading activity. Now, if you feel like today's the break and we're going to go lower, then this is a fabulous trade because you can get in on this, and then it would be somewhere here, 7, 8, or 8, high sevens, $8 maybe over the next 2 or 3 days. That's if the market were to really sell off. So it's a great way to be making money if the market's going down and you just treat it like a bullish stock and you buy it. I don't think that that's a great idea. I'm talking about it here for those people that believe that the U.S. market is weak and gonna lose ground. But as I said, I think the number one idea is the idea that, hey, hang in there. Why? Well, we saw the Aussie yen. We saw the NASDAQ futures. They're both, trending up. We saw, we explored what was behind all this move, this overreaction to the court case for Apple and how Apple hit. And then later on through the day, that filtered into all the other ETFs going into the weekend. And clearly everybody thought that was an overreaction because why? They're buying it up again today, right? So, so that's why I feel like buying the bullish side is a better idea, and Apple is probably the best idea of those. Of the things that are trading high in the pre-market, let's look at most active, percentage change, and see what is most bullish. Because you could ask, well, if we're bullish, then why don't we buy a good growth stock that's really going to take off? Well, because they don't all look that good. I'm going to look at these two, ITMR and ATER, and we'll see. All the other stuff is kind of penny stock. There's AMC at $51 a share. That's a little interesting to me. Is AMC really $51 a share right now? Yep, sure enough. So meme stock situation, do you really want to be buying meme stocks right now? I feel like the answer to that is no, because GameStop, where's GameStop? It's at 193 right there. So GameStop had earnings. They were estimated to be losing 67 cents a share, and they came in losing 65 cents a share. Now, there are people that said this time last year, hey, GameStop, it shouldn't be shorted to oblivion. It's not going to go out of business. It's a strong enough company, and they're going to hang around. It's worth more than $5 a share. That was Keith Gill's kind of point of view. Keith Gill was of the opinion that, maybe it ought to be 15, 20, 25. And he was surprised to think a couple of months later, wow, there could be a short squeeze. This thing could go to 50. That's where he thought it could go. It went to 483 as part of the short squeeze. Just because it went there, short squeeze is a panic. That's the naked short people panicking and trying to get out. They don't think that it's valued that high. They buy the stock because they're trying to get out and limit their risk. So there's no way the stock's worth $483. Even Keith Gill, guy who likes to look for deep value, he didn't think, in his wildest dreams, he was thinking 50. This thing came in 10 times higher. So that's about a 90% overvaluation at that point compared to even his thinking. And so here, if you say, well, GameStop's not worth $5 a share, but is it really worth $200 a share? People have been holding on to this idea, liking the stock, because they think the short squeeze only got started and it could be so much bigger and stronger. I got to tell you, I think that that's a fantasy, because if you're $1 billion plus hedge fund and you got caught in this, you did something about it. What you did is you worked options. That's what created the gamma squeeze. That was that. And then this, retail buyers being late to the party. Yeah, we're pretty excited about it, but do they really have those guys? Because if they did, this should have been at least to that level, if not a new high. They don't. And now, what do we have? Let's look at the reality. Is GameStop worth $200 a share according to this earnings? No way. It's not worth $200 a share because they've got a year, they've got incredible new capitalization. They could spend a lot of money on things that could really improve the value of their company. Have they done it? No, they haven't. And if they had, they would have been talking about what their prospects were, and the market would have been saying, yeah, we love that idea, and throwing more money at them. Instead, they're selling it off. And even today on the rebound, it's an extremely tepid rebound, right? So I don't feel like the whole GameStop idea has a lot of legs behind it. Now, AMC, it's like, maybe people are coming back to the theater. So there's this movie out, Free Guy. If you haven't heard about it or seen it, it's pretty fun. My wife and I went and saw it on opening night because we thought it looked fun. It was really fun. We enjoyed it a lot. And we're old fogies, the younger crowd. I would expect that they are liking it a lot. In fact, they are liking it. They're liking it so much that no digital platform, Netflix, Amazon, Disney Plus, whatever, none of them are carrying it or allowed to even carry it until October 1st. 6 weeks exclusive theater access. And I'm thinking that movie is driving people back to theaters to some degree. We also had a couple other blockbusters, Black Widow. Earlier than that was Cruella and Jungle Cruise. All those are Disney Marvel kind of things. Um, and then Disney's been making bank on selling it through their Disney Plus platform. But I hear people talking about wanting to go to the theater, see those. So it could be that the idea of theater, going back to the theaters, is popular enough that people think AMC's got some opportunity here. They came in with um, better than expected earnings somehow. Yeah, people thought they were going to lose 94 cents a share. They only lost 71. They didn't lose as much, right? So took that as a positive, and things have been running up. So these are the two big meme stocks here, AMC and GME. GME just doesn't look that good. AMC, maybe, right? Maybe. Where are they? 51.80. Yeah, that's not terrible. That's like above its old high where it's going to open today. So these two are on divergent tracks, and everything I said about GME, I still feel good about. AMC seems to be countering that argument. The people are still interested in trying to come after this one as a meme stock play. So all that being said, I don't feel like running around looking for meme stocks is the best idea right now. So although that's on the list, and CLOV, that's another meme stock. I don't think that that's quite the best right now. And then how about this top one here, ITMR? Let me show you this. I'll show you why. I don't want to touch it. So another medical stock similar to GGAL, the one we were looking at for a run up, and then it's kind of holding here. But look at that volume. The volume looks terrible. It's low. This thing, if it drops fast. If it goes up fast. Yeah, I get that, but there's just too much risk here. It's not heavily traded. Look at the difference between the bid and the ask. Pre-market, it's not heavily traded. I don't think that those are good ideas. All right, we're going to run over and look at Apple though, and try and see in real time, or as close to real time as we can on this platform, how Apple's going to trade. Coming out of the gates, we're just a few seconds away from the markets opening. And where are we trading? We're 51 by 67 on the pennies there, still at 150. We have on our paper trading a limit order in 150.70. We'll see if we get filled with that and how that goes. As I say, just a few seconds away. Let's see if I got my Oh, ready? Here we go. Boom, there it is. So we open, and yes, we got filled. And what are we doing? What's Apple going to do right out of the gate? It's going to go higher. And we'll see if this holds. I'm gonna watch this for the whole first minute and see how that candle closes. So my thesis is that even if it doesn't keep going up, that what I don't want to see is Apple come down and break that low. I'm giving it all the way to 148 even, but I don't want to see it uh, take out all of this and keep going. If so, then that's a very bearish sign. My idea was that, hey, that was an overreaction, people jumping in to buy, the buyers are going to give the sellers a run for their money. So we'll see in this first minute whether or not that plays out. Okay, so minute's done. First 1 minute candle is done, and it closed higher. It opened this high, and the sellers were not able to sell it down. I mean, that all could change in the next few minutes. You never know. But that all by itself, I think, is a confirmation of what I was saying, that buyers felt like that's an overreaction, and they're willing to come in and buy this up some more. And so we'll see how this goes, and whether or not the upward move continues. Even into the second minute here, we still see some buying. So I feel like I'm not crazy for thinking that people wanted to buy up stocks. And let's go check out QQQ really quick at the same level. So Q's, same thing, held. The second minute is held. Tighter range, right? Oh, but there it is. See, look at that. Yeah. And Apple continuing on with this third minute. All right, I don't know. I gotta say, I feel vindicated already. I mean, it's not a big move. It's not a huge move just right out of the gate, but it held that jump. So I feel like that's a worthwhile confirmation of the idea that this is a dip. If you like buying the dips, this is your dip to buy. All right, everyone. Until next week, take care and trade well.